Time now for business, and we say hello to Kate Moody, who's been counting or trying to count, right, the effects of the slowdown in the world economy due to the coronavirus outbreak. One sector in particular is commodities, with slumping prices for many, including oil.
Yeah, absolutely. And the industry is really trying to catch up now. We've seen oil prices drop around 15% in the last few weeks. US WTI actually dipped below $50 a barrel on Monday. Now, prices are rebounding on Tuesday because major producers are poised to once again slow down their pumps. Officials from OPEC and Russia are holding talks in Vienna about how to react to China's weakening demand for oil. BP has said the coronavirus outbreak could cut global oil demand by as much as 40% this year. James Wilson reports.
The spread of the coronavirus is being treated first and foremost as a public health emergency, but the virus is also having an impact on the global oil industry. Travel restrictions in China and neighbouring countries have caused a slowdown in manufacturing and led to plummeting consumption of oil. Usually, China needs 14 million barrels of oil a day, but as factories and businesses stay shut and customers stay home, demand has dropped to 11.2 million barrels a day.
We're talking about a cut of 20% in the consumption of petrol in China alone. So just imagine the impact on the global scale. We're seeing a global drop of 1 million barrels a day. It's enormous.
Weakened global demand has seen the price of oil drop to its lowest level in a year, all of which has shocked the industry. Oil companies have already reduced production in recent months, and now officials from OPEC and their ally Russia are meeting this week to consider whether to further slash production by between 500,000 and 1 million barrels a day. Less production would probably see oil prices rise, allowing the industry to weather the crisis caused by the coronavirus.
Korean carmaker Hyundai is suspending production in its 7 domestic factories because of a lack of parts connected to that virus outbreak. Hyundai says it's looking for alternate sources of electric components, which it usually imports from China. Wuhan, the city at the center of the outbreak, is a major hub for the auto industry. Nissan, Toyota, Honda, and Ford are among the producers that have suspended production at their plants in China as the virus continues to spread. Let's check in on the day's trading action now. Wall Street is trending sharply higher. The Dow Jones shooting up as much as 500 points, over 1.7% there. Same story on the S&P 500. The Nasdaq is up over 2%. It's being powered in part by Tesla shares. They're trading up over 16% after a record-breaking day on Monday. The major European indices jumped as well. We saw gains of between about 1.5 and 1.8% there. BP shares rose 3% in London as the oil giant reported a net profit drop of 21% for the year. That was still far better than analysts had predicted. Meanwhile, after falling to a 6-week low on Monday, the pound sterling has rebounded to trade around the $1.30 mark and just above €1.18. The parent company of Google has for the first time released figures on how much money it makes from YouTube. It comes after years of pressure from investors who wanted to see how the figures break down across the online advertising giant's earnings. Catherine Viette reports.
A mixed bag for Google's parent company Alphabet as its profits grow, but not enough for Wall Street. The tech giant reporting an overall revenue increase of 18%, less than what investors were expecting. And at first, the company broke down the details of its YouTube and cloud businesses. Google Search still makes up the lion's share at 61%, with YouTube accountable for 9% and Google Cloud 6%. This is something investors have been demanding for years, and the move to greater transparency has come after founders Larry Page and Sergey Brin stepped down from the company last year. Despite growing competition from Facebook and Amazon, Google is still the clear leader in the digital ad market. And many see YouTube as a bright spot for the company. Alphabet chief executive Sundar Pichai says there are 2 million paid subscribers, and he expects that number to grow. Meanwhile, the video site has announced measures to clean up the platform, saying it will remove any election-related videos that are, quote, manipulated or doctored to mislead voters during the U.S. presidential race. Google says it's part of efforts to stem online misinformation and become a more reliable source for news.
Worth pointing out, Francois, that investors haven't been all that impressed with that breakdown of results. Shares of Alphabet down about 3% this hour.
Interesting. Many thanks for that, Kate Moody. We'll have more business news for you later.